A user on X posted this, and I thought I would share it with you guys. He said, every bull on X is saying something like, Bitcoin is in a massive cup and handle. It's time to pump. And every bear on X at the same time is saying, recession is coming. We're going lower. And his point was that when everyone calls for something to happen, it won't happen. So now what? If every bull is calling for a massive pump and every bear is calling for a recession, well, then what's the actual outcome going to be that fools everybody? And I think that both of the outcomes is going to occur. And that's how it's going to fool the greatest number of market participants. I think that we're going to see a pump following the Fed rate cuts, and it will be sort of the last minute pump, the last stand of the market. But that will be a bull trap, which will fool the market into thinking that we're going to keep going euphorically up. And after that somewhat short-term pump, I would give it a couple months. I mean, who knows exactly, right? Like 1 or 2 months is typical historically. Maybe this market cycle will fool everybody again and it'll go up for 3 or 4 months. But I feel like that's pushing it very, very much so. And really the average would probably be more like 1 or 2 months of pumping. And then this would be followed by a massive economic crash that would last for over 1.5 years. That would be kind of the minimum time frame you'd expect it to. And of course, the government's going to jump in there and try to print money and recover it. And eventually it will recover, but it may take some more effort because of the underlying economic backdrop, the reason for the crash, such as the greatest yield curve inversion and the longest yield curve inversion over the past 50 years. And the Fed funds rate being held high for over a year now. And unemployment starting to go vertical, which historically, every time it does that, it doesn't stop. And it just keeps going up until it surpasses at least, I forget what it is, 5% or 8% unemployment. I think it's more like 8%. And so it has a little ways to go. And that's what cracks the economy, because when people start losing their jobs, they don't have money to spend, and they certainly don't have money to invest, excess cash. All the non-essential things in life sort of go out the window, and they focus on just, paying their rent and buying food. They don't buy Nvidia stock or Bitcoin when they don't have excess cash. And that's the reason for the downturn. And then the Fed panics and drops rates really fast, trying to stimulate the economy, but it's too late at that point. And so that's my rough outline for what I think is going to happen here. So to put it real concisely, I think that we're going to see a final pump in the next, let's say, end of this year to about the midpoint of next year would be the absolute last possibility. I could see that happening. And then whenever that pump peaks out, let's call it January or December, somewhere in there, February maybe if we're lucky, that would be the peak. And then we see a downturn that lasts for 1.5 plus years. And that's just going off of historical averages and taking into account the magnitude of this crash and the fact that this crash is not isolated to just a dot-com crash. It's not isolated to just housing. It's like the everything bubble. Everything is in a bubble. And so that combined with the fact that the yield curve was the most inverted it's been for 40 years and the longest it's been for 40 years, and all those things I mentioned at the beginning are the reason for why I think this will be one of the bigger crashes we have seen. And we'll eventually get our way out of it, but it will present an opportunity to those who have cash on the sidelines. And that's what I'm hoping to take advantage of. I guess the way I look at it is for a crash of this magnitude to occur, by definition, it would have to make the maximum number of market participants wrong. And for a crash of this magnitude, this is not just a correction. This is a once every 20 to 40 year size crash, the largest crash in that period of time. So I would say, you know, 9 out of 10 people are going to get it wrong. And that's probably being generous. Probably more like 99 out of 100 people are going to get it wrong. And then you'll have those rare few like Michael Burrys in there that somehow get it right. So I guess obviously we're all trying to get it right, but by definition, for a crash of that magnitude to occur, the vast majority are going to get it wrong. Obviously, I'm trying to get it right and I'm doing my best. That's why I stay glued to all these metrics and indicators and charts. And I think that we have a increased chance of being right, but as you know, the margins of odds in trading is not super high. So like even if we're at 60-40, 60% chance we're right, 40% chance we're wrong, I hope that we're obviously in that right camp. And so I intend to, well, I hope that the market goes up, I get to take some profits, then it crashes sometime shortly thereafter, not too long after, but probably I won't sell the top, obviously, next to impossible. And then I wait and I have some amazing opportunities and I have some cash on the sidelines. That's the goal. That's the aim. Will I pull it off? That's the question.